Hi, everybody. It's Mark here at Tesla. Tesla closed green today, which is, I know it's barely green, but we have to be thankful that it's green at least. Because last night, around maybe 11 or 12 a.m. Eastern, Tesla cut prices on a lot of the variants of the Model 3 and Y. And something to the tune of like $2,000-ish per car for the long range and the performance versions, And that kind of sent the whole Tesla investing world and trading world into a tizzy. With the old argument coming up, should Tesla cut price or should Tesla advertise? We talked about it in another video. In that video, we talked about how, why would Elon give money to people he hates, people who run the major media and advertising organizations of the world, be it online advertising like Google or Amazon, or mainstream media, which would be like ABC, NBC, and CBS, Fox. They all hate him. They all treat him pretty badly. So I don't understand why people think Elon will give them a single dollar. But Tesla closed at $260.53 or 48 cents on the day, in percentage terms, 0.18%. Now, I would say this. We kind of, like I said all the time, we don't know where pricing is going to go, but we can kind of have an idea when it starts breaking a direction where it wants to go. And what did we say yesterday? We said, as long as we can kind of maintain one of these two uptrends, basically these diagonal trend lines, the red one being a longer term from this bottom over here. This was back in the 27th of September, and it was touching here when it sold off on the 23rd, the 3rd. And that's going to be how we drew the red trend line. And that kind of maintains general bullishness, right? If we said it can probably touch around 251 to 252. And if it does, and it bounces, it's still in an uptrend. And it sounds crazy, right? Because think about that. That was like a 3.5% drop. Like, what is this drop? What was this? 3.6%. Now, something I also want to say is that we talked about this on Thursdays a lot. Thursdays they're going to set something up for Friday. And why is that? Because on any other day of the week, Monday, Tuesday, Wednesday, Thursday, the only time you can really get a great 0 day to expiration trade is through the index ETFs, be it SPX, SPY, QQQ, IWM, UDAO, or something like that. But single ticker, those expire just on Fridays. And it's almost like a perfect storm. Now, we remember there was this Friday right here. So this was Friday right here. This is a huge move, right? That's a big move in a day and a half, basically. That's 6%. That was on a Friday. What did we have today? We had this really nice move where it was a gain of 4%, from trough to kind of close. If you went to peak, that would have been a little bit better of a trade. But Thursday's set up for Fridays a lot because they want to have a big move. Because if you do have a nice big move on a 0 day to expiration on a single ticker like Tesla, or really any company that gives you that opportunity once a week, they want to have that setup. And you'll see setups happen sometimes where it's either to the short side, like how Tesla sold off really hard one time over here, or it's going to be just a simple long. And how do you determine when to enter that long? Having these trend lines drawn gives you just a simple approximation of how much can this sell, and when this looks like a decent entry based off what we talked about, the structure of the pricing. And I actually did take a long here. Now the entry wasn't perfect. I would say I didn't enter at here. I want to say I entered around up here around 252, and I went all the way to the peak around 261, and I closed it. I want to say I closed it like a couple minutes after 3 p.m. And that gain, if you would have had a 260 call, for instance, I think that was like a 900 something % gain near the lows to the close. So that's one of the things you want to watch if you're trading Tesla. Just have your lines drawn already. When you go into the day, have your lines drawn already, because what you want to do is look for confluences. Look, this is close to 250. This is our trend line, and basically, as long as we maintain this bullishness, I think we can feel generally good about the stock. Because what is the stock doing? What we want to understand is that the market doesn't want to let this fall, right? Just as much as you and I can be really bullish about Cybertruck, let's say, other people are too. There's going to be institutional investors as well, where they're like, okay, they have this new product coming out that can jeopardize the OEMs. It could jeopardize Rivian. And Tesla can run away with this segment possibly. And there's no reason to let it fall now with the strikes really taking a toll on OEMs and Rivian having to raise cash just a couple of days ago. Their stock drops 22%. And then you have to ask yourself, who wins out of all this? Everyone keeps saying, and even the mainstream people say, oh, Tesla's the winner, and Tesla's the winner. Well, what we're seeing with the price action lately, though, is kind of true. Because why is that? Let's think about this. There have been times where there's like 3 or 4 times this year where Tesla cuts price and the stock always falls. And it falls somewhere in the range of 2 to 5%. We fell 3.5%, 3.6% today. And in all those other days, it doesn't really recover that day. And so what we had that sell-off because of the price cuts. It wasn't really commensurate with the rest of the market, right? Because the market closed much stronger, much more green than Tesla. But Tesla closed green, flat basically on the day, recovering almost 4%. That says something about how the market is really feeling. They want to be ready for that move for Cybertruck. Now, the caveat is, and by the way, I do want to say something too. We've been talking about the Model 3, and if the Model 3 Highline is going to be introduced into the United States of America, I kept telling you guys, mentally prepare for a Model 3 price cut. And I didn't know the Model Y would be cut as well, but that could be because they might introduce interior ambient lighting, the new wheels, they might introduce the new dash, all the stuff that the Model Y has in Giga Shanghai. But anyways, so we talk about, you just have to mentally prepare that the Model 3 announcement for a price cut can happen anytime, as once they start making those preparations to what? Bring the Model 3 Plus into the United States of America, into North America, basically. So we talked about that as well. But everything kind of lines up with, our, I don't want to use the word predictions, they're just common sense, right? Eventually, they're going to cut price on all the inventory Model 3s. Now, you might not see those price cuts because you might not have any inventory Model 3s. You might not even have even the Ys, really. I mean, some places are just not, there's no inventory on a local basis, which is good, right? But I do wonder, though, something we want to think about, maybe not now, but in the near future, is if they're bringing the Model 3 Plus into America, does that mean Fremont is going to get shut down again? Or I don't know if they shut down last month. I don't think they did. But are they going to get shut down as well? You know what we should do? Don't shut down the Model 3 line completely. Let's just shut off the Model S line. I mean, how about the Model X line? I'm going to bite my tongue on the Model X because we don't really have strong numbers. Because I think what happened is when they introduced the price cut for the Model X, it was just too late in the quarter to really reflect deliveries. That's a possibility why the S and X did not look good in the delivery report that was released. Okay, like what, week 2 weeks ago? Was it this week? But anyways, yeah. So I really like the look of this. This is, the market is propping this up. So let's look at the S&P 500 really quick. Now, the S&P 500 had an amazing move today too. And we can kind of look at the chart again. So it respected the same level that we've been watching since forever, basically, 421. And it got to 421. And if you took this long, I couldn't have blamed you. I didn't take this long. My wife took the long, and she got, I think it was something like 900, no, maybe 1100% move to the tippity top, I believe, if I remember correctly, which is a great move on her part. That was amazing. That's probably one of the best trades I've seen like in my real life. But it was a great trade, and it was a great opportunity. If you're watching the price action, like when things start to sell off, like, yeah, you can be pretty sad about the market. You can always be really frustrated with the market, but just remember, Fridays are the days that you can get a nice move sometimes. Unless that move is OPEX, which is what, the 18th of this month, that move kind of sucks sometimes. OPEX moves, we talk about it. I don't like to trade it. Like maybe you get the move for OPEX in the first hour and you just like never look at OPEX for the rest of the day. I've lost a lot of money on OPEX. So that's just my recommendation. Ask your financial advisor what you should do. But generally, like you can get a super cheap entry on these 0 day to expirations. So how that works is, okay, a lot of people lose a lot of money on 0 day to expirations, right? Number one is because I think, people say all the time, like, there's ways to manage risk. But I think managing risk is really just managing your cost basis, because if there's a big move to be had, like we've been selling off for so long, right? Like this is one of the weakest RSIs you could probably see in your lifetime. But anyway, it's not true. Obviously not true, but I'm exaggerating. What I'm saying is that when people do like 0 day to expirations, they're looking for this humongous move. But the idea is, if you're trading, you're just trying to make a couple bucks a day, right? Maybe that's to augment your daily income, or that is your income. But if you go ask one of your friends, just your average, everyday, ordinary American, and be like, hey, bro, like, how much, if I could work at your job, like, how much would they pay me an hour for like any open position they have? And maybe he says it's like $25 an hour. You can make $100 in 5 seconds in the market. I mean, you're telling me that you couldn't make $100 on this move, on this bounce, this when basically double tapped the 421. You think you could? That's easily $100 on an entry of maybe $10. So I think cost basis, entry, those are the things that are risk management tools. If the market sold off 0.7% in the morning, and you have an option to buy a $10 call, that's $10. What people get messed up with is like, I'm going for the home run. I'm going to go spend like $20,000 on a bunch of 0 day to expiration options. And if you look at for the rest of this week, some of those options were just, you would get grinded out, and you get pretty scared swinging that much money through some of these ups and downs. Like today was very clean, pretty clean compared to this. Like, what is this over here from Wednesday? You'd have to be so fast, like all the time. And the levels, I don't think were very clear for me on that, other than, this is a bull flag that only moved up like 0.16%. Friday is a great move though. So I would say, look for those Fridays. Maybe don't look for it next week, but look for those Fridays that have a good setup. And that could be, a sell off with an oversold RSI, which that's something we've been looking at. And the thing about it is, I don't know if we'll get this move ever again for the rest of the year. Now, you want to know why? Just remember, I'm going to give you a percentage, and I just want you to remember that it's the S&P 500. Okay. 2.5% in 4 hours on the S&P 500. I'm just saying, that's a move, man. So it also kind of brings into question when you think about Tesla. Like, Tesla didn't gain really but a couple cents today, right? But the S&P 500 went up a lot today, and that's something that I talked about in another video as well. That if you're long Tesla by shares, the option play that you want to play sometimes isn't just doubling down in Tesla, because you miss out on a lot of things. Like, you miss out on AMD, you miss out on just the S&P 500, for heck's sake. Like, you're all. I should put it in in the description of every video. You're already long Tesla. You're already long Tesla. Now there's this idea that when you look at Tesla, and the people give all these excuses for, the reason why Tesla trades at the ratios it does, like, it's the PE is like 72 or something. It's because, the future potential growth from FSD, AI, and Optimus Robot. But then it's almost like you're saying to yourself, this thing is an overpriced asset because of this potential in the future. I respect that completely. I own just Tesla, and with longs on S&P 500. So I completely agree with you. But think about this as think about this concept that might help you not keep over leveraging yourself through derivatives with just Tesla. And it's the Tesla share, one share. Just think of that as an option. Because if you were to buy a Leap that think about this. You buy a Leap and it costs you like, $2,000. And if the stock goes up, maybe it goes up like 40%, right? But if the shares go up, they'll go up 8% on that type of move. And the shares don't decay. They don't have theta that's destroying them on a daily basis. And they move so violently that it's basically an option, right? So if you can think of every share you own as just an option on Tesla, I think that might help you understand, like, what I mean. Like, you're already long. You don't necessarily have to go incredibly uber long, just Tesla. And I would recommend that. And I would always do it vice versa. That if you're super long Tesla shares, that your long would be QQQ, S&P 500, Apple, something else. So you can capture the move when it's actually happening. And Tesla's flat, even though it recovered, and everyone's happy because it's a price cut. You get a dump in the morning, gaps down, and then what? The rest of the market moves up to a considerable extent. Like, what did the QQQs move up today? 1.68%, right? So think about it like that. Think about it in that respect where the market is so oversold. The S&P 500 is trading at a price it traded in 2021, just like Tesla. Now, we know the S&P 500 has been outperforming Tesla for years. So if that's the case, like being long the S&P 500 is basically a hedge, basically trying to capture a move on the market that's been oversold for 2 years. Something to think about. It's something to think about, right? You can be like long Tesla shares, long leaps of S&P 500, long leaps on QQQ, and kind of just, manage that risk of single ticker risk, kind of like the whole, keyman risk with Tesla and Elon Musk. It's a similar premise. So we were looking at yields yesterday. We'll talk about yields real quick. This is super interesting. Now, what was I telling you last night? If you saw this chart, that's a long, right? That's an easy long. And the long you would have captured on yield would have been something like 3%. And it completely sold off and it went back up, right? But this is what? This is a long. You would have bought this chart, and I still would buy this chart. With one little thing now. Like that, if you didn't watch yesterday's video, the exercise was this. I'm showing you the 30 yield chart. But I want you to pretend you're actually looking at Tesla. Pretend this is any time frame in Tesla. It could be 30 seconds, it could be 1 hour. But just imagine this is Tesla. You would buy this chart. And the excuses you'd give me is this. You would tell me, rounded bottom, and guess what? It played out, right? It went up. What's another thing you could tell me? Oh, well, now this chart is a cup and handle. This is a cup and handle ready to explode at this level. You would tell me that's going to go up, right? And I completely agree with you. The funny thing is, I still agree with you completely. So this is something to watch. There was a huge move. This is on the NFP, and we'll talk about NFP in a second. We'll talk about the economic stuff that happened before the market opened that essentially dumped the market, and we'll talk about that real quick. But the chart still looks like what? That nice even round bottom, potential cup and handle, with one caveat now that you can basically tell me that, Mark, this is actually bearish. And the argument I would agree with is this. This is if you're a Wyckoff pattern technical analysis person, this could be your upper thrust. This could be your UTAD. This could be whatever the upper thrust variant is in Wyckoff, where it bursts up, swift rejection, test up here. You can get a 50% test if you want to. You can go 70%. I don't care. And if the sell-off happens, it's going to be a violent sell-off on yield. If we look at the 10 years, oh, yeah, kind of the same thing. You want that upward thrust and you want to sell off. But for now, the yield still like a possible cup and handle. It's going to go what? It's a cup. It's a big, loopy, kind of curvy thing. You're going to have essentially a sell-off. Basically, maybe that's taking profit. Maybe that's just whatever it is. I don't know what it is. But essentially is a test that doesn't go all the way to make a new low, right? The test is like, I'm going to go down a little bit. That's healthy and go back up. And this is going to be really important right here. If this comes back up, that forms a cup and handle. If it rejects, it'll be an easy thing to call. If you're watching yield all day long, it's if it starts coming off that's triple top. That's easy, man. That's really easy. But if it turns here, where this kind of confluence of action is, if it turns right here at 4.82 and starts selling off, you can be pretty comfortable with equities, I believe, kind of at that point. Because the market's still pretty oversold, even though we had one good day. That doesn't really get the RSI moving, but something to really think about. Let's go over to the browser real quick and just look at what happened this morning and why things happened the way they did. Here's that stupid unemployment report. I don't know if we remember, if we talked about this on Wednesday. When ADP payroll came out, ADP payroll came with 89,000 jobs. And everyone in the banking world was like, all the analysts were saying, ADP, that's unforecastable. You can't count on ADP. You can't model their formula. No one likes ADP, and we're not reacting off lower payrolls for ADP, blah, blah, blah. We believe that non-farm payroll, the U.S. government's employment report, is the real payroll report. Okay, come Friday, 8:30 a.m., 336,000 jobs. Market sells off 0.6 to 0.7%. And everyone on Twitter was like, yeah, we don't believe this payroll report. Goldman Sachs is like, no one believes this report at all. Or, and they didn't. This number, and I'll show you some tweets from Zero Hedge that kind of describes what's going on here. This number is a ridiculous number. Not because it's high, but why? Because of the composition of this number, right? So we have a little bit less pressure on what? We wanted less pressure on hourly wages, and that's what we got. We're a little bit lower on hourly wages. That's a good thing. Every 0.1, trust me, we need that because it means there's no growth. Well, there is growth. Obviously, it's a rate, but you mean the growth isn't as much as the previous month. Unemployment rate ticked up 0.1. That's what we asked for, right? Just 0.1, nothing crazy. And consumer credit was shockingly awful. No one has money. And they keep raising rates into no one having money. Don't they get like the average ordinary American person has maxed out credit cards. They're going to the grocery store and they're filling up their cart 1/8 of the way. And it costs $110 for food. Don't they get it? No one has money. Look, you know what? We can't do anything about it. We're not the Fed. The Fed doesn't even know what they're doing. Okay, let's look at Zero Hedge and kind of understand what happened here. So he tweets 10 hours ago. 336 jobs reported. Understood. That's a crazy number. No one believes you. Government, not Zero Hedge, government. So, and not to mention, non-farm payroll employment for previous months revised up. No one believes you. Look at this. Of the non-farm payroll jobs, almost all the gains were not full-time workers. Full-time workers, there was actually a loss in full-time workers. Part-time workers, 151,000 jobs. And the rest of the jobs are not even that. I don't think I show it here, but they're multiple job holders. These people are working multiple jobs. No one has money. It kills me why they think, you know what? I'm getting worked up for no reason. It's Friday. All right, let's go back to the charts and look at the charts again. Look at Tesla again. We looked at the yields. We looked at the S&P 500. It kind of happened the way we did. It bounced off our yellow line that we've been watching. It was stronger than we thought. I thought on a sell-off, it would sell. But it bounced on our yellow line. And I would use those levels, guys, by the way, to at least try to take a stab for a very, if you have the money and you can get a cheap entry, it doesn't hurt when it hits your levels. Draw all your horizontal lines. Draw them everywhere that makes sense to you. And so if you're looking at Tesla, you might ask me, like, Mark, where do you draw your lines at? Where do you draw your lines? Well, you want to draw your lines at just places where it maybe bounces. But it's kind of look at the confluence of where it bounces. Look at this point right here. So we're looking at this dip in the morning of the 2nd of October. And where does it kind of jump from? 242.51 or 242.57, I'm sorry. Look, we always talk about it all the time. The $5 increments and then to a lesser extent, the $2.50 increments on Tesla shares. Those are all options strike points, basically, right? What about here? Like, where do you get all this action going on right here? Why is this happening? 245, right? It's just a $5 increment. Exactly. Where do you get rejections from? 255, right? You see, like, where did it bounce today? 250. Where did it find resistance? 255. It hit it 4 or 5 times before breaking through. Where did it close under? 260. It got to 261, and everyone's like, nah, we're going to try to not pay out these 260s. And they paid them out. They paid them out. Because I think the people who own the 260s were not just you and me. I think the people who own the 260s was the street. And they're looking at all these other auto manufacturers and you're like, you know what? I'm not sure. But what do we think about next week? Okay, of course, we're going to have a whole weekend to go through and so much can happen. As you know, look what happened last night at midnight. So much happening. Tesla, everything. Okay, and you can kind of put this in comparison. If Jeep Wranglers were reduced in cost by $1,500, would they make the front page of like every thin twit person in the world? Would they be talking about it on CNBC? Right? They would not. Like, everyone has this laser focus on Tesla. No one's talking about how all the OEMs have 0% financing in an interest rate environment where the Fed funds rate is like 5.5%, and all these 0% deals. Do you know who's paying for that? The manufacturer is subsidizing all these financing deals. That's essentially a price cut. That's essentially a price cut. And everyone gives crap to Tesla because they're being transparent with the pricing, because you don't have to fight through a dealer, or the dealer is financing, or the manufacturer financing. All the kickbacks the dealers get, the dealer upcharges. It's just transparent pricing. Actually, Tesla should be praised for that. Instead, even people within the own community give Tesla a lot of crap for the price cuts. They're just trying to move cars, guys. You know, they're trying to move cars. I would assume going into next week, from an upper limit type of perspective, 4.5%, just slightly over 270 is kind of what my upper limit would be for a non-Cybertruck week. Like, if we still don't have any information on Cybertruck, I don't think we're getting above 270. Maybe 270, 250 would be a nice move, but I'll do some calculations this weekend to see what I like. But maybe 4.5% up and down would be my range that I'm come looking at. From going down, that would be like 248, 247.50. It's that's kind of possible. It's basically just like, it's still pretty bullish, I think, in my mind. No significant new low. Taking out the low in the 243 area would be sucky, in my opinion, but looks kind of okay for now. And this was an amazing trade if anyone got this. I hope some people got it. Yeah. But otherwise, the dollar is rejecting. This is a weekly chart in dollar. It finally printed a red candle on the weekly. And let's look at it. We can look at it closer, but you got to wonder, is this it? This is where the dollar comes down? Like, nice sharp rejection. It's possible, man. This could be it. All right, guys. Have a good weekend. I'll work on some other videos and maybe talk about price cuts maybe, or some UAW OEM stuff as well. All right. Have a good night. Bye.